Hello and welcome to the weekly roundup, week ending Friday the 21st of May. Hope that you're enjoying these reports. Please do subscribe to receive regular stock market content. Get yourself over to the website Research Centre for all the latest reports. And any questions, pop them in the comments box below. Love to hear from you. Right, so general theme this week is inflation. Inflation concerns across the globe, particularly in the US, have continued to linger again, although we are starting to see them ease now. So minutes from the April FOMC meeting revealed that several of the Fed policymakers were ready to start discussing the tapering of the bond purchases in the coming months. Given the Fed's recent insistence that now is not the time to start taper talk, it did catch the market a bit by surprise. US Treasury yields popped, the US dollar jumped, equities slumped, but the reaction was short-lived and the effect soon faded with the yields easing lower, US dollar weakening again, and equities, particularly the tech, rebounding as we head towards the weekend. So Nasdaq set to book a mild gain of 0.8% across the week, snapping the 4-week losing run. Meanwhile, the S&P and the Dow are set to book a very mild loss of 0.3% and 0.8% respectively. Back over this side of the pond in the European markets, focus has been on the UK, which took another step along the reopening path, easing lockdown restrictions further on Monday. UK data has also been very buoyant. Unemployment unexpectedly declined to 4.8%. Inflation did double to 1.5% year on year in April. The retail sales roared higher, jumping to 9.2% on a month-on-month basis as services reopened the doors. And the PMI data indicated that the UK economy is a much better place than it was even after the first wave of COVID. So the data has had more of an impact on the pound than the FTSE, which is set to finish the week down 0.3% lower. And the DAX over in Germany just looking to end the week roughly flat. In the FX markets, pound against the dollar, pound has benefited from the strong data across the week and the softer US dollar. So the pound against the dollar is set to book a weekly gain of 0.8%, third straight winning week. The US dollar itself is heading for 0.5% losses, tracing the yields lower as the inflationary fears do ease, despite the Fed's hint at a tightening of policies. Euro against the dollar, well, the euro has also gained ground against the greenback, helped by the strong PMI data and an accelerating vaccine program and the easing of lockdown restrictions. Commodities market, oil actually lost over 5% across the week amid reported progress in the Iran-US talks to revive the Iranian nuclear deal of 2015. Progress towards an agreement could see sanctions against Iran lifted. The prospect of Iran's oil flooding back to the market has just weighed on the oil price. Gold continues to charge higher, gaining just shy of 2% this week, its third straight week of gains. Gold has been supported by the weaker US dollar, falling yields, and possibly by the sell-off in cryptos. This is a good chance that those exiting positions in Bitcoin and other cryptocurrencies which have plunged this week could have rotated into gold. Gold also grabbing the attention as the traditional hedge against inflation. Stocks that have moved quite notably well. Dunelm rallied 7% this week and trades up around 30% so far this year. Homeware and furniture store said it expects to smash full-year profit expectations, and sales in the first 7 weeks of Q4 were 59% higher than pre-pandemic levels as customers are flocking back to the store since they opened. Big news for Trainline, another great one. They crashed 23% lower after the government announced a revamp of the rail network, which would include a state-backed rival website and app for train tickets. This would compete directly with Trainline and erode its dominant position in the UK markets. Vodafone have plunged 9% this week despite returning to profit. Vodafone rebounded from a loss last year to book €536 million profit despite a fall in revenue. The mobile phone giant saw annual revenues tumble 2.6% as COVID travel restrictions meant that roaming charges essentially evaporated for them. Furthermore, investors were less than impressed with plans to increase capital expenditure to expand its network. So it's been a very lively market out there. this week. Thank you very much for watching. Please remember to subscribe. Head over to the App Store for the app. Have a great weekend and thank you.